Welcome, everyone. So, large institutions are not completely ignoring APLD, but they do appear to be waiting on further confirmation. Retail investors, on the other hand, are aggressively buying based on headlines. We've seen significant overall growth in the market recently. As always, this content is for educational and informational purposes only. It is not financial advice or a recommendation to buy or sell any security. All investments involve risk, and past performance does not guarantee future results. Always do your own research or consult with a financial professional before making investment decisions. That said, there are still some things that need to be proven. Right now, we are buying dips on SIM. We entered a robotics trade this morning and are actively monitoring that position. However, let's shift our focus to APLD. There is clearly an opportunity developing in this stock. APLD is not a simple company to analyze. It is fundamentally an AI infrastructure build. That means heavy spending comes first, and the payoff tends to come later. Because of this, many institutions have not fully committed to the story yet. Even as price pushes toward the $42 level, APLD still needs additional contracts, broader adoption, and consistent cash flow generation. Retail investors have not been waiting around at all. We're seeing substantial retail inflows, strong hype, elevated volume, and rapid price movement into the $42 range, which represents all-time highs for APLD. What's interesting is that APLD can rally aggressively to $42 with no news at all, and it can also sell off just as quickly. That's an important side note to keep in mind. This morning, we were using Prophecy AI for our analysis. Although the system is closed today, we will be trading live again tomorrow. If you want to tune into our daily live trading sessions, check out the second link in the description below. Now back to APLD. The $41 price level is one we've been targeting for quite some time. Currently, the stock is trading in the $39 to $40 range after experiencing strong recent growth. Here's what investors need to understand. Looking at investments and ownership, including exposure from companies like Nvidia, we can review insider and institutional activity. Recently, we've seen Applied Digital activity, along with purchases from Vanguard, while BlackRock and State Street have shown some selling. Importantly, we haven't seen major new institutional buying at the insider level. There have been some institutional sales, but no significant insider selling. Looking ahead, projections remain bullish as we move into next year, with price targets above $50 per share. That represents roughly a 38% upside from current levels. From a long-term perspective, APLD looks attractive. However, in the short term, institutions are still hesitant and are not fully buying into the quarter-over-quarter growth story just yet. Revenue did spike recently, but APLD still needs to clearly demonstrate that recently signed contracts are meaningfully reflected on the balance sheet. The AI hyperscaler contracts with CoreWeave, including a 15-year agreement, are expected to drive future growth and revenue expansion. Even so, the actual materialization so far has been relatively modest. Revenue increased approximately $40 to $50 million from the previous quarter, but net income remains negative, with losses of around $19 million. This reinforces that APLD is still very much an infrastructure play. The company is firmly part of the AI narrative, and AI-related headlines can drive sharp price surges. However, premium pricing is already baked into the stock. At current levels around $42 per share, APLD carries an approximately $11 billion market capitalization. The sector itself is trading at a premium, with Prophecy AI projecting targets in the $50 to $54 range, implying roughly 40% upside. In the near term, however, the key level to watch is $40 resistance. We did not see any interest rate cuts today, rates remained unchanged, and there was no major inflation data released. That said, broader macro conditions still look bullish. The job market remains strong, with quarter-over-quarter improvement. Long-term, the outlook remains positive, but in the short term, corrections are absolutely possible. APLD could pull back into the 35 to 36 range, which would represent a 7% to 15% decline from recent highs. The stock is attempting to establish support in the $39 to $40 area, but the $40 to $42 resistance zone has rejected price multiple times in the past. If bearish momentum develops, the next downside target would be $35 to $36. Institutional buying is still increasing overall. According to Nasdaq data, there are approximately 260 increased institutional positions compared to 131 decreased positions. BlackRock, Vanguard, and State Street have all been adding shares over time. Nvidia is also a major investor, holding roughly 7.7 million shares, representing about $280 million in investment, which supports the long-term infrastructure growth narrative. APLD continues to see strong demand from data centers and has been aggressively expanding its capacity. Last quarter, revenue came in around $126 million, solid but not exceptional, while net income remained negative. This is why the $39 to $40 support zone is so critical. A breakdown below this level could send price back toward $35. This is also why we did not trade APLD this morning. At market open, the stock spiked to $42, but we chose to avoid it and instead traded robotics. Shortly after, APL sold off roughly 7%, dropping back toward $39. Another potential 7% decline is possible if key support levels fail. From a long-term standpoint, we are holding positions and will continue covering APLD. In the short term, however, we remain cautious due to volatility and valuation concerns. We need to see additional contracts clearly reflected in earnings. If you're tracking APLD, Wolf, IEN, or multiple stocks at the same time, having a structured system becomes critical. As portfolios grow, repeatable systems are essential for consistency. That's exactly why we introduced Prophecy AI. Prophecy AI follows the same entries and exits every time, removing emotion from the process. If you want to learn more, check out the first link in the description below. We're opening a limited number of spots for weekly trainings, tools, and new features that roll out every Friday. Once again, check the first link below to see how this system can integrate into your portfolio. Like the video, comment below with the stocks you're watching, and don't forget to like, subscribe for more content.